Dear friends, welcome to Weekly View on Market. The market consolidated during this week with positive bias. Mid cap and small cap stocks outperformed during this week. Fourth quarter GDP, which has come at 6.5%, has surprised the market. It was above the estimates of many agencies. So that has given good support to the market. On the back of good macroeconomic fundamentals, the positive momentum in the market is likely to continue in the coming weeks as well. Let us look at the performance of indices during this week. Nifty has closed at 18,534. It was up by 35 points, and it traded almost flat during the week. Bank Nifty was also down by about 80 points. It has also traded almost flat during the week. Mid-cap index gained about 1.62%, gained 542 points and closed at 33,966. Small cap index also outperformed the market with gain of 3.1%. It gained 310 points and closed at 10,321. India VIX is at 11.12, and the volatility in the market has come down, which is indicated by India VIX, and India VIX is quite stable uh, for past several weeks. Now let us look at sectoral performances. Most of the sectors consolidated and traded with a positive bias. Realty sector has gained more than 3.8%. Media sector has gained about 3.15%. Consumer durables, healthcare gained about 2.5 to 2.6%. Pharma gained about 2.37%. PSU banks gained about 1.89%. Auto and manufacturing gained about 1%. Only three sectors were in the negative zone during this week. Oil and gas sector lost about 2.75%. Energy sector lost about 1.87%. IT sector was almost flat with only 0.09% down. So the market breadth was positive. There were more gaining stocks compared to the losing stocks. So the outperformance of mid cap and small cap sector and consolidation in the Nifty and Bank Nifty is very good for the markets. The market breadth is positive. So I have a positive view on the markets going further. Now let us look at the charts of indices. What is going to be the technical view for the coming week? This is a daily chart of Nifty. As we can see, the Nifty chart is making higher tops and higher bottoms. And this week we can see a mild correction from 18,600 level. So market has got resistance at around 18,650 to 18,700 levels. So if this level crosses in Nifty, then Nifty will go to the previous high of around 18,800. And Nifty has good support at around 18,500 level. The lower line on the chart indicates the support level. So there is a good support at around 18,600 levels for the Nifty. So I expect Nifty to consolidate or move to the higher level in the coming week. Let us look at Nifty Mid Cap Index. If we look at long-term chart of Nifty Mid Cap Index, it had made a high of 33,000 in the month of October 2021. And after that, it has corrected and consolidated in a broad range of say 27,000 to 30,000 for now almost 1.5 year. And after that, now it has broken out above the consolidation level and crossed 33,000 level. So this type of chart structure indicates that there is more upside in Nifty mid cap index. This is the daily chart of Nifty small cap index. The small cap index has staged a strong recovery from 8,600 levels to 10,200 levels. Now it is trading above 10,200 levels, closed at around 10,221. If we look at the chart structures, this kind of move is called breakout above multiple tops. It has made a top on September 22. Then again it has touched that level on December 2022. After that it corrected and now it has crossed this level of 10,200. So this kind of structure called breakout above multiple tops has positive impact on the chart structure. So I hold very positive view on Nifty small cap index also. This is the daily chart of Bank Nifty index. Bank Nifty index has closed at 43,937. And if we look at the chart structure, it has touched 44,000 and after that there is a slight correction. So Bank Nifty has to close above 44,000. Then it has got more upside. Going by the fundamentals of the banking and financial stocks, I feel that after consolidation of few days, the banking index will go above 44,000 and we'll see higher levels in the banking index. I have very positive view on this sector for coming quarters and for next 2 years. Now let us look at some of the fundamental factors of the market. This is the first week of June. So lot of data has come out, and this week is going to be very data heavy. So GDP growth for Q4 has come at 6.5%, and for full year the GDP growth has come at 7.2%. These growth numbers are better than the estimates. So market is very happy with the GDP growth. That is why we are seeing a lot of buoyancy and positive sentiment in the market. PMI manufacturing index has come at a high of 58.7 for the month of May 23. So it is showing that the manufacturing and industry is in the expansion mode. So since it is at 58.7, so the economy is expanding at a good space. GST collections for the month of May 23 has come at 1.57 lakh crores. It was at 1.5 lakh crore in the month of May last year. So it has given a good growth during this month comparing to the last year same month. Car sales for May 23 have also shown an increase by about 7 to 9% of different companies. Two-wheeler sales have increased by around 7% for Hero MotoCorp. Bajaj sales have come at much higher levels. Their dispatches have almost doubled. TVS two-wheeler company also has shown good growth. Commercial vehicle sales have also gone up by around 10% or more for different companies. Tractor sales have remained flat for the month of May. RBI dollar results is steady at around 590 billion dollars. INR USD rate is at 82.4. It is quite stable for past several weeks. Dollar index is steady at around 103.56. RBI has paid a dividend of 87,416 crores to government. So this shows the underlying stability in the Reserve Bank, and it reflects stability in the Indian economy. And this is a record sort of the dividend that is paid by RBI to the government in past several years. There is a lot of buoyancy in the banking and financial sector, and RBI governor has cautioned PSU banks about the corporate governance. They need to improve their corporate governance standards, and also he has cautioned about greening of bad loans. They have adopted different techniques and different methods of greening the bad loans. That has come to the notice of RBI, and he has told that when there is a lot of good sentiment and euphoria in the economy, that is the time banks tend to build up bad loans. So, with respect to this, the RBI's caution to the banks seems to be a very good factor. This will give a lot of confidence to the investors in the banks, and also FIIs and other people who are investing in the Indian economy. Gold price is steady at around 60,380 for 10 grams 24 carat. Crude price is hovering at around 76.40, and this week, FIIs have bought 6,518 crores, whereas DI have sold about 1,044 crores in equity. The continuous FII buying since the first week of April is giving good support to Indian markets. So, by looking at the chart structures and the macroeconomic indicators, and also looking at the GDP growth, which has come at 7.2%, I expect the market to scale higher levels as the macroeconomic data is quite strong, and companies have shown good growth in earnings in the Q4 results. So only thing, since the market have run up sharply in last 1.5 month, I remain little cautious on the valuations. But there are pockets of good companies trading at reasonable valuations. One has to pick and choose those companies. You know, when the market rises very sharply, the valuation tend to go higher, and one has to exercise lot of caution with respect to valuation. My overall view on the markets is positive. Investors can make good money in next 2 to 3 years. Only thing, they need to be highly disciplined. They need to invest with knowledge and research, and they need to choose companies with good valuations. Mutual fund investors continue to remain invested, and they should continue their SIP investments, and they will get very good returns in next 2 to 3 years. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can post your questions, like my videos, and share with your friends. We'll meet again next week. Thank you.